This trade came 3 cents from my target and then it started going the other direction, right towards my stop. And in that moment, I was reminded of the hardest truth about trading, a truth most traders spend years fighting. You can't know what the market would do next. But here's the strange part. Nothing about this trade was random. The location was correct. The pattern was there. I waited for confirmation. Everything about this trade followed my rules. And yet, for a moment, it looked like the market was about to prove me wrong. Let me show you what was happening. This is PLTR on the 1 minute chart. This first red line is yesterday's high, and the second red line here is the high of some day back then. The market opens down here, pushes towards this high, breaking this high, going towards the second high, rejecting here. So now levels like this matter because they act like decision points, places where the market decides whether it wants to continue higher or reject the level and move lower. Most traders see a level like this and immediately start guessing. Will we break? Will we reject? Up or down? Win or loss? But that's the trap, because trading isn't about guessing, it's about waiting. And as price sits under this level here, something begins to form, a small bear flag. Now, patterns by themselves don't mean much. A flag in the middle of nowhere, I ignore it. But when a flag forms directly under resistance, like in this case, that's different, because it tells you something about what the market is doing. Buyers trying to push through the level and sellers defending it. Pressure is building, and eventually one side wins. But I never enter inside the pattern, because that's where the market loves to fake people out. So I wait for confirmation. A candle that actually breaks the structure. A candle that shows sellers are stepping. And when this candle here closed outside this flag, that's when I enter the trade short. At first, the trade starts working. Price moves down. Exactly what you want to see when you are short. Then price gets close to my target. Very close here. 3 cents, probably 3 cents away. Only 3 cents. And it stops. Now, technically, nothing is wrong with this trade. The structure hasn't changed. The setup is still valid. But psychologically, this is where trading becomes difficult, at least for me. Because the moment price gets this close to your target, your mind starts asking questions. Why didn't hit? Is the momentum fading? Is the market about to reverse? Should I close this trade? This is the exactly moment where many traders interfere. Not because the trade is wrong, but because uncertainty feels uncomfortable. And that's when the hardest truth about trading appears. You can't know what the next candle will do. You can't know if the price will drop another 3 cents. You can't know if it will reverse. You can't know the outcome. And the more you try to know, the more emotional trading becomes. Because what traders really want is control. But the market doesn't give you control. The only thing you control is your process, your entry, your risk, and your discipline. Everything else belongs to the market. So when price is starting moving back towards my stop here, I didn't change anything because the rules hadn't changed. The structure was valid. The trade was correct. And eventually, the market made its decision. Sellers stepped back in. Momentum returned. And the trade continued lower. Then 50 minutes later, it hit my target down here. But the real lesson wasn't the outcome. The real lesson is this. You can do everything right and still not know what the market would do next. And once you accept that, trading becomes simpler, not easier, but simpler. Because you stop trying to predict and you start focusing on execution. As always, process over profits and discipline over dopamine. Thanks for watching.